Hi everyone and welcome back to Kiwi Investments. In my last video, I mentioned that I was thinking of stopping my YouTube channel for good, and whoa, I was flooded with comments by my subscribers asking me not to, and that's when I realized I have some very lovely subscribers and how could I walk away from that. So I'll keep making videos about investing, but unfortunately I didn't have anything planned for this week because I really was thinking of stopping for good. So instead I decided to show my entire stock portfolio, the companies I own in New Zealand as well as my overseas investments. As I go through my portfolio, I will mention why I bought into some of the companies. I won't talk about all of them because when you see my portfolio, you see I have invested in a lot of companies. And if I talk about why I invested in all of them, we'll be here for ages because there are different reasons why I invest in different companies. As you're watching this video, I want you to be very cautious and to not let it influence you to buy any companies just because you've seen it on my portfolio. And that goes out to any investment videos that you watch. Be very critical and cautious to not let yourself get influenced by someone else. You should do your own research before you buy into a company. And that's one of the reasons why I don't like showing my portfolio to people. It's not due to privacy concerns. It's because I don't want to influence anyone to buy into a company just because I have bought into it. Because I can be wrong and I have been wrong in the past. Alright, so let's get started. We'll first start with the New Zealand portfolio. So I'll log into my Sharesies account first. So here we are in my Sharesies portfolio. So my portfolio value is $25,000. Now a few months ago, I made a video on my Sharesies portfolio, and there was a run when my portfolio value was $25,000 as well, and I mentioned that I was going to slowly take money out from my portfolio and put it into ASB portfolio. I was doing that and I ended up in the same place again because I started investing small amounts into more companies. But my new plan is to slowly take money out from my Sharesies account and put it into overseas companies. And if you watch my last video, you'll understand why I'm doing that. If you haven't seen that yet, I highly recommend you watch it and share it. Most people don't know how fragile the New Zealand economy is. And it's a bit scary how we are just ignoring it, when in fact it can very well affect you, me, and everyone else in New Zealand. So do have a look at that video and share it as many people as you can. But I'm not going to repeat myself here. So if we move down here, so all of my funds are doing great. They're all in the positives apart from the property funds. So global property and New Zealand property are both down, but everything else is in the positives. Now I bought into Air New Zealand recently and it has gone up by 9%. I don't think I'll hold this long just because we haven't seen the full impact of COVID-19 on Air New Zealand yet. I'm expecting it to be really bad. That is why I'm going to keep a close eye on Air New Zealand's calendar. So if we go to the investor page and go down to the financial calendar, I'm probably going to sell Air New Zealand before this date because I'm expecting negative numbers to appear in their report. All this time the planes have spent on the ground would have cost the company a lot of money. And when investors see that on the financial statements, it might scare a lot of investors to sell. So that is why I may sell it before those financial statements come out. Now, I say I may sell it because you have to remember that the stock market is forward looking. So when people invest in a company, they look at the future of what the company can do. So since we're slowly coming out from this pandemic, investors are thinking that in the near future, Air New Zealand will start flying again. So even if negative numbers come up on the financial statement, it probably won't go down too much because most investors will be looking into the future. So that's why I haven't decided yet whether or not I'm going to sell my shares. I will keep an eye on it. And I will decide closer to the time. It'll depend on the news and what has happened until then. So why did I buy into Air New Zealand when I'm expecting bad results? Well, I bought into Air New Zealand because I predicted the behavior of other investors. When you watch the news, you see more and more positive news about travel, such as the news about a possible trans-Tasman bubble, which is good news for Air New Zealand because that means they can get their aircrafts off the ground again. So when I hear news like that, I think about what other investors are going to do about that kind of news. And that is why I bought into Air New Zealand as well as Auckland International Airport. Predicting other investors' behavior, you can make money. After all, it is people's behavior that determines the share price. As you can see here, Air New Zealand is up by 9% and Auckland International Airport is up by 13%. Again, I may or may not sell them depending on the news. I might even hold on to it because it is our only national airline and the government wouldn't want to see that go. By the way, I went into a little bit more detail as to why I'm expecting negative numbers from Air New Zealand. So if there's any new viewers on my channel, I highly recommend you watch it as I don't like to repeat myself in my videos. Anyways, Arvida Group is a new company that I just found. I don't even know if I'm pronouncing it right. It's a company that owns retirement villages. And the reason why that was attractive to me is because of the baby boomers are about to retire. But there'll be a lot of people looking for retirement villages. And unlike other New Zealand companies, this group pays dividends 4 times a year. So that will make all the dividend lovers very happy. Very, very happy. If you look at their history, as you can see, they have paid dividends 4 times every year. Most New Zealand companies pay only twice a year. Let's go back to the portfolio, going down. I bought into Blis technology because they have just gone into America and there's a lot of potential over in America. Especially these days with the pandemic, health is in front of everyone's mind. So they could potentially make a lot of profit over in America. EBOS, one potential threat to this is the new generation. Because the new generation moves around a lot, owning pets is not in their minds. Fisher & Paykel's up by 21% and Kathmandu was up by a lot, but I didn't keep an eye on it. So it has come down to minus 0.5 now. Kiwi Property Group, the reason why I haven't sold it yet is because if you look around the mall or if you have gone to the mall lately, you see that it's starting to pick up. It seems like people have missed going to the mall. So I'm just going to hold on for a little bit longer to see what happens. The biggest threat to companies like this is the increase in online sales. More and more people are shopping online. Let's keep moving on. Pesos is an interesting one. I did put over $1,000 in it, because they had nothing but good news throughout the pandemic. They showed continued growth year on year. Total recurring revenue grew by 122%, and the number of employees in New Zealand that is paid through their service increased by 82%. So it's nothing but good news, but unfortunately, the share price of Pesos has not been doing so well. But I won't sell it though, depending on how many of their customers have closed down permanently. But at the same time, as companies look to downsize their HR team, the number of their customers might increase. Pushpay is another company that I'm kicking myself over. I knew it'll be bullish, but I only put $100 down, and now it's up by 45%. I wish I put more down. Instead, I put $1,000 on Pesos. I remember buying this, it was on the same day, and I clearly made the wrong choice. But that's alright. Now, Skycity is another company that I'm planning to sell soon before they release their next financial statement. And the reason why I want to sell Skycity before they release their statement is because most of their income is from China. And as long as the borders are shut, they are losing that income. I say China because Skycity has a whole international team dedicated to bring very wealthy Chinese people into the casino. Skycity pays for their flight, food, accommodation, and any tourist activities they want to do, as long as they come and spend millions in the casino. And I do mean millions. I remember there was this one guy who lost, I think, about $4 million in the casino, and he wanted to go and get change into his lucky clothes. And by the way, his lucky clothes was in Australia. So Skycity paid for the flight for him to go to Australia and the transportation for him to go to his house in Australia, get change. And then Skycity flew him back, and guess what? He lost another $4 million. I guess his clothes was unlucky after all. And this wasn't a one-off event. It happens a lot at Skycity. So anyways, the point is, as long as the borders are shut, Skycity will be losing that revenue. And not to mention, the plans for the new International Convention Center would all be a mess right now as well. So the reason why I bought Skycity again is because I predicted other investors' behavior. Skycity is now open, so I predicted investors will start buying into Skycity thinking that they're making money again. But I know that they're not making the full amount that they usually would be making. So I'm going to keep a close eye in the Skycity's calendar to see when they will announce their next financial results, and I'm probably going to sell before the results are announced. Moving down, these are some other companies that I have completely forgotten I have. But if you come and have a look at the spreadsheet that I have created, and I come and change this from biggest to lowest, you can see the top gainers this week. So ANZ and Westpac are one of the highest gainers this week. So it looks like their downwards trend is about to turn around, and I knew it would be only a matter of time before it happens. I was thinking about investing more, but I used that money to invest in other companies. I was just happy to hold on to these companies. We'll come back to this spreadsheet if we have more time. So that's my Sharesies portfolio, and let's move on to ASB. So here I am signed into my ASB account, and if you go to portfolio, and here's my portfolio in my ASB account. And straight away, you can see that the number of companies I have invested in is much smaller, and my portfolio value is much larger than Sharesies. And my largest holding being Meridian, I invested around $9,000 and it's currently up to $10,000. So I gained $1,500. is up by 17%. Unfortunately, everything else, except for my New Zealand bond fund, is going down. So overall, my portfolio is down 13.87%. That's a $6,000 difference. And that is because this company still hasn't recovered from COVID-19 yet. But that's alright because I don't need to sell these companies anytime soon. So I'm happy to wait. There's not much else I can say about this portfolio, but for reasons I said in my last video, I might sell some of these and invest it overseas. Speaking of overseas, let's change platforms and have a look at my overseas American portfolio now. And let's start off with my hedge account first. So here I am signed into my hedge account, and over here you can see that my portfolio value is $15,000, but that's in American dollars. So let's come up here and change that to New Zealand dollars just to keep things consistent. So in New Zealand amount, my portfolio value is around 24,000 or 25, I should say. And it's down $3,000 thanks to one trade in particular, and we'll come back to that. And as we come down to have a look at my portfolio, you'll be able to see that all of my companies are in the green, unlike my New Zealand portfolio. And I explained why that is in my last video. Well, they're all in the green apart from one. But that's alright because that's my smallest holding. Every other holding is above $1,000. So I'm not too worried about my smallest holding going down. So I'm going to quickly go over the stocks. So the first one is Stage Industry. It's a property REIT that could benefit from all the online shopping because all the online orders have to go somewhere first, and that's where this REIT will benefit. Waste Management. It's a relatively safe company because you're always going to need waste management. Alphabet, which is the parent company of Google. Chubb is an insurance company. American Waterworks. This is an ETF that pays dividends every month. Caterpillar, an oil and gas company. Another ETF. And if you go down a little bit, Visa is a company that I might be looking to sell soon because in the near future, they're going to have a lot of competition that are more innovative. And another energy company. So to explain why my portfolio is still in the negative when everything else is in the positive, as I mentioned before, it's because of one company. So if you go to my transaction page and I search for ABLE and go all the way down, just over a year ago, I bought into another property REIT called Apple Hospitality REIT. I spent about $5,000. It was actually a really good REIT that paid their investors dividends every single month. It was doing good until the pandemic came. I was holding on to it because they were paying monthly dividends, but then I saw other better opportunities, so I decided to sell it at a loss. Spent $5,000. And if you go to the first one, I sold it for a very painful $2,362. That's almost a 50% loss, but I did make over $300 in dividends because they paid dividends every single month. Now let's have a look at my stake portfolio. So let me just log into my stake portfolio really quickly. So here I am starting into my stake portfolio. And if you go up to dashboard, you'll be able to see that stake has my smallest portfolio holding. And there's a good reason for that. So the current portfolio value is around $800 and I have another $400 waiting to be settled. So the reason why I keep my stake portfolio low is because for personal preferences, I use stake the most often. Because of their $0 transaction fee, I take advantage of that and buy and sell as many companies as I like. Most of you wouldn't like the sound of that and would probably asking me why I don't buy and hold. And I do buy and hold, and I do recommend everyone to buy and hold. Research has shown that's the best way to invest as well. But I actually enjoy being an active investor. I like to buy and trade in small amounts, and that is why I keep my stake portfolio very low, relatively speaking. So to go over this portfolio, again, I should mention that this portfolio will change almost every single day. But right now I have Google and this is the Apple Hospitality REIT. Yes, I am buying back into it. I'm going to dollar cost average into it. And that's another benefit about stake is because of the $0 transaction fee. I can dollar cost average into it without having to worry about paying $3 for every transaction like you do in hedge. So that is why I recommend stake if you want to buy and sell American stocks. Next one down is Colgate and another energy company. And the next one down is an ETF. Next one down is another property REIT focused on digital. And Dropbox was my free stock that I got from stake. You can get one too if you use the referral link in the description. Let's keep moving down. I have another energy ETF, gold ETF, GoPro, McDonald's, Tesla, and a corporate bond ETF. Tesla is an interesting one. Tesla's stock price has been all over the place, and Elon's little space adventure he got going on the side could make him the world's first trillionaire, but he seems to be focused on getting to Mars. If he focused his resource on mining asteroids or the moon, he could be a very, very, very rich man. Scientists have said that if we find a way to successfully mine asteroids or the moon, the payout would be massive. But here's the catch. If you mine something in outer space and you bring it back down to Earth, the value of whatever you mine, let's say you mined gold and you brought it back to Earth, the value of the gold that you brought back will decrease because you have brought back a large amount of it. So what scientists are saying is that if you mine for water, because water is rare in outer space, if you successfully mine water and you set up a fueling station in outer space, you would be a very rich man. Because right now, to blast water into outer space, it costs a lot of money. So it would be better to fuel up in outer space. And also water can be used as fuel to propel spacecraft in outer space. So if you're watching this and you have a few $1 billion in the side and you're looking for a side hustle, now you know what to do. But to be honest, there's only one man who's rich enough to do that as a side hustle. But he seems to be more focused on getting to Mars. Nonetheless, it's still very interesting. Okay, let me bring you back now because that had nothing to do with Tesla. Tesla is more of an automobile and an energy company. But anyways, regardless of Tesla, as I mentioned before, America is where you should invest your money if you want to make a profit from the high volatility in the American markets. The US has much more stronger and better established companies than compares to New Zealand. And if you want to use Stake to invest in America, then use the referral link in the description. If you use that link to sign up and you fund your account, then you will get a free stock of either Dropbox, GoPro or Nike. So that is free money for you just for signing up and funding your account. You can fund your account with as much as you like, but the minimum trade you can make in Stake is $10. And remember, you need to fund your account. There has been a couple of you that used my referral link but hasn't funded their account. After signing up, you need to fund your account and you can either get Nike, GoPro or Dropbox. So that is free money for you guys because you can sell the stock straight after you get it. Right now, Dropbox is trading around $22. GoPro is trading around $5 and the biggest one, Nike, is trading around $100. So I hope you guys get either Nike or Dropbox, but if you get GoPro, that's not too bad as well because that's around $5, which is free money. So don't forget to use that link to sign up and fund your account. So what's next for me? Well, I think we should all keep a close eye on the US and China's growing trade tensions. Both sides handled the pandemic very poorly, so they might be keen to change the subject and to make themselves look powerful again. Who knows what that will be? But regardless, I will be putting more money into the US economy. I have about $20,000 in a fixed term deposit that's ending this week, and I'll be looking to invest that money overseas. And if you want to find out why I'm investing more overseas rather than New Zealand, then check out the video I did about the future of New Zealand's economy, which should pop up in your screen on the top left hand side. And if you want to watch a review of the Stake platform, then click on the top right hand video. I also did a video comparing Stake with Hedge, and if you want to watch that, click on the video on the bottom left. And finally, click on the Kiwi dollar on the bottom right if you want to subscribe to the channel. Thank you and see you in the next video.